Good afternoon, guys. This is Patrick, and you're trading with Prime. What a day today. I wasn't actually going to do a video today, but because of what happened in the marketplace today and the type of candles that we started seeing today and the overall sentiment in the marketplace possibly changing from bullish to bearish in such a short amount of time, I went ahead and decided to put this video out. So it looks like the VIX was up today over 30%, but it ended up closing out the day at 26.46%. We have seen an uptick in the VIX, so that it was something that we were watching, something that we were curious about as to whether it was some sort of hedging or if there were actually bets being placed that the turn was coming. TLT was up 0.28%. The dollar was up only 0.04%. It was up more earlier in the day, or excuse me, UUP, which is a way to trade the dollar. And if we go down the list here, pretty much everything else was in the red. Precious metals were in the red. The financials were in the red. The transports were in the red. The yields were even in the red. IWM, S&P 500, the IBB, which is biotech, also the NASDAQ, the SMH, the tech sector, all in the red today. So we're going to get into all of this. Okay, so what we're looking at here, I want you guys to kind of see on my screen here. This is actually the dot-com bubble low. If you follow my cursor back here, this is actually 2001, 2002 dot-com bubble. We posted this. I think we featured this in yesterday's video. And we actually had this on the Discord and in the social media posts. And so what we were talking about was there's this rising trend line from the dot-com bubble, and it goes up, and you can kind of see where it starts to tag against these upper portions of what some people were dubbing the megaphone type pattern. And just so you're fully aware of what a megaphone type pattern is, I've seen some people draw it like this. That's possible. I've also seen some people draw it kind of like this, where it's a megaphoning out kind of a pattern. I prefer the top one. It's more like this as far as conceptual, but you have to keep in mind this is a weekly chart, and this is a pretty wide time frame period. So the reason why we have to keep this in mind is, even though we have a trend line here, it's always possible that price shoots through it during the middle of the week, say the daily chart or the hourly chart, and then of course by the end of the week it falls back down below. And because of how extended we were, if you notice this rally off the lows, and I'll get a measurement of this from the March lows till now, it's 63% in the S&P 500. So we knew the turn was coming. We just didn't know exactly what day it was on. And this is exactly why we were not positioned in a way, or we were trying not to be positioned in a way where we're going to hold a lot of heavy positions in the S&P 500 or the QQQ. If I go over to the NASDAQ, which we'll look at in a minute, that was even more extended. And so that was also something to keep an eye on. We're getting up there as far as price goes. I wanted you to see this. Now what I'm gonna do is I'm gonna go down to the daily time frame. And just so you can see the daily time frame, of course, I do have a couple trend lines. One's coming off of the close to what's the March lows over here, April lows. Actually, we're beginning of April. And then of course we have this one up here, which is the infamous 2001 dot-com bubble. That's a trend line up there. The thing is we did shoot through it yesterday, and in yesterday's video we talked about this. I'm going to go down to a lower time frame. Well, before we get off the daily, this was something we were looking for. This is what's known as a reversal candle, and because we closed at such low prices today, I would probably expect lower prices coming into tomorrow, possibly even the rest of the week. However, the overall trend is up, and that's something that we have to keep in mind, is that the bulls are resilient. They're going to buy at these prices. It's not going to be so easy just to roll over, although it is possible just to shoot right through this rising trend line. Although I'm not so certain that'll happen. Sometimes we have to be aware that what can happen a lot of the times, I'm going to zoom in for you guys a little bit more here. Sometimes what will happen is you'll see the actual reversal candle. And by the way, the type of volume that was today was pretty heavy volume. I'm going to give you a reading. The reading is 144, almost 145 million shares traded. That is heavy, heavy, heavy selling, possibly even buyers mixed in there. But we closed the day pretty low. This is a higher time frame. We could see a little bit of action tomorrow. Sometimes what happens is we'll open up the day, we'll have a couple consolidation days, and then they'll go ahead and hit it again. that would be, in my opinion, the most likely scenario. However, anything is possible. Like I said, for all we know, price could open up and just start shooting down to the south side again. Another thing to keep in mind, finally, is the third option of price finding support there on the 20 period moving average, which is the 20-day moving average, and then just start making higher highs. Nothing would surprise me at this point either way, but that's something to keep in mind. I'm going to go down to the 15-minute chart. 15-minute chart, we saw the same kind of action, and what we were talking about yesterday is, let me zoom in for you guys a little bit more here. So what we were talking about yesterday is price did shoot up here. It made this consolidation pattern, and then it shot up again, consolidated, ran higher into the close. Normally, under normal circumstances, that would mean higher prices today, and that's what we'd be looking at. However, we gapped down, we gapped down open, and then we traded sideways on the 15-minute chart, giving the likely scenario that we're going to fall even further. And of course we did. And we actually fell down and found a little bit of support at this gap fill. But again, because we closed that 15-minute candle at the low of the candle, that told us that further downside prices were likely. And so at this point of the trading day, we should already have it in our minds that any stocks that we're holding can be affected by the broad market. If the broad market is going to have a really bad day, which, to be honest, it's been up so much and has not had a decent pullback, it's pretty much going straight up in the air. It's extremely likely that any kind of pullback we get could be a 400, 500, 600, 1,000 point move to the downside. We just don't always know that that's what's going to happen. So it's a good idea to just really lighten the position sizing if you are going to take swing trade long positions, or to be honest, any kind of swing trading positions in these higher volatility environments. That's what I'm expecting for the next several days. I'm expecting higher than normal volatility, which means we could have a pretty big, again, like I said before on the daily chart, we could have a pretty big rally. We could also have a pretty big sell-off. And then, and we're going to start to see those wider, the swings are going to start getting wider and wider, in my opinion. It's not 100%, but that's what I believe to be the case. The other thing is, any kind of rally we get, I could almost, I'm not going to say certainly, but it's highly likely that they will be shorted back down to lower levels. Although we are in an overall uptrend, so again, it would not surprise me to start to see, if we did see a higher low being put in, buyers stepping in here, and of course I don't have the after hours on, but it looks like the bid is 346.13 and the asking is 346.20. So that's something to kind of watch here on the. It just faded away all day. We are trying to, maybe some buyers did show up here at the end of the day. So we'll just kind of see what tomorrow brings. And again, like I said, since the after hours is 346, that's roughly around this price area over here. What I would want to be a buyer is the higher low scenario, but we also need to get back above these moving averages. And of course, this is the 15-minute time frame. Really what I'd be after is the hourly time frame at minimum. I'm going to go over to the Qs. And actually, before I forget, let me pull up my, this little, I'll forget by the end of the video. If you guys are gaining value out of these videos, be sure and hit the subscribe button, hit the bell notification so when we go live, you won't miss a beat. Also, we do go live Sundays, 5 p.m. Pacific Standard Time. And that'll really give you guys an opportunity to ask questions if you're a new trader and you want to get learn the markets a little bit more. The other thing I wanted to show you guys since I'm on this is I'm going to go ahead and go over to the Discord. I posted a link of the Discord in the description of the video underneath. This isn't by any means like a, hey, this is what we do every single day. We put up these kind of numbers, but just so you guys can kind of see, we do have alerts in the Discord. They of course are premium. The premium's not bad. It's only 25 bucks a month. Right now as the special is going, it's 25 bucks a month. If you guys get into the Discord, there's no reason why, and I'm not saying, again, these nut figures aren't every single day. We aren't making this kind of money. It just happens to be, sometimes we do really well, sometimes we don't. But these figures alone could pay for the actual monthly membership. So if you get in now, like I said, it's 25 bucks a month, and that is for life, so you don't have to worry about it again. Okay, I'm gonna get off my own boosting our own server here. So again, the description is in the video as far as the link to that. Also check out our website, rtbtrading.com. Check out the website if you get a chance. Looking at the NASDAQ, I'm going to get off the 15-minute chart. I'm going to go to the daily chart. And if I have enough time, I'm going to run through a lot of charts. But if not, I'm going to just keep it simple today. The same thing in the NASDAQ. You have to understand that we've rallied 84.42% roughly since the March lows. I'm going to say that again. We've rallied almost 85% since the March lows. That's not normal. That's not normal for any market. I don't even, it just isn't normal. But the thing with this coronavirus, the coronavirus dump was not normal. The relief rally was not normal. But here's the thing, and I'm going to leave all you bears with something to really consider here. The thing for the bears that the bears really have to understand too is that this market is in an uptrend. This is a buy the dip market. And as far as I'm concerned, I would be looking for a pullback like I've talked about, either in price or in time, looking for a pullback to some sort of resemblance of support. And guess what? If I can align that with something over here or something, horizontal on the chart as far as horizontal price levels, maybe even down here at 274.50, somewhere in that price area, maybe even, just above that at 279. This doesn't have to be a crash. This could just be a really quick correction. It doesn't have to be something too serious or extreme. Let me zoom down to a little bit lower of a time frame. I'm going to go to the hourly chart. And as you can see, it felt like a lot today. We're down. Let me get an actual reading where you guys can actually see this here. We're down 6%. So just to give you a heads up, like we've rallied, 85%, and we're down 6%. So I know what all the social media is saying. I know it's blood in the streets. I know that, coronavirus 2.0 is going to be stepping up to the plate here, and we're going to be taking out the March lows. Let's get something really clear here. This market is bullish. It's in an uptrend. Even with today's sell-off, as you can see on the screen, that's pretty bloody. I mean, that's basically an elevator down, down to the black hole of abyss. And I know what the bears are thinking. They're just going to keep buying puts and buying puts. There's no reason why we can't come down here, just check in with support really quick and then start making higher highs. As far as being a bull goes, I would let price do its thing. You don't have to be the first one into the trade. Let price do its thing. Let it set up. Maybe it's going to find support. Wait for the higher low scenario. That's the best risk to reward available. It's the easiest risk possible. You don't have to be let's catch the falling knife kind of a person. You don't have to look at it that way. Let's look at TLT. So TLT, we've discussed the theory every night. I don't want to put you guys to sleep with my theories on the theories that I have as far as the bond market goes. I am looking for a little bit of volatility. It was interesting that we closed the day on a reversal candle, and I know that it's a reversal candle. It doesn't mean that tomorrow, what makes it a reversal candle is if we started making lower prices. As of right now, it's above the moving averages, all three of them, the 20, the 50, and the 200. Although I wouldn't give so much weight into the 20 and the 50 because we've already came up here and, we've been chopping through the 50 and the 20. Had we come down all the way down here to the 200, I would definitely put weight in the 200, but that's not what's going on right now. I would definitely want to see what's going on. If this does pull back a little bit, I would be interested in a higher low scenario from this point over here. And if we got above these highs, that would definitely interest me in some sort of purchasing of TLT. Let's go to SMH. Oh, it's SMG. So SMH, again, looks pretty much identical to the QQQ. Again, the same thing, the same rules apply. This market is bullish. Even if we came down here, in fact, let me do this just so I can humor myself here. Let me put it on a weekly chart. Okay. So on a weekly chart perspective, look how far up we are compared. This right here is the 20 period. This down here is the 50 period, and down here is the 200 period. Don't mind these levels down here on the screen. They do not apply anytime soon. Just looking at this chart, as of right now, let's say tomorrow we close the week. This is really what's going to matter. If we close the week back up anywhere up here, to the high side of the SMH, which would include all of your things like NVIDIA or AMD, those kinds of things. This is a reversal candle on the weekly time frame, and I'm going to go ahead and I'm going to zoom in a little bit further. So this is a weekly reversal candle, and this is heavier volume, which would tell me lower prices were expected in SMH. But again, the same thing, I'm going to urge caution. First of all, we're still in, I wouldn't say the middle of the week, but it's Thursday. We have one more trading day. Tomorrow's prices are really going to decide, they're really going to determine whether this is a weekly reversal or not. And in fact, it doesn't mean next week we can't come up here and retrace up the reversal candle. The benefit to the bears now, the benefit that the bears have is they can take this price, the high is 184.61. They could take the high of that price, and let's say they wanted to put a stop loss somewhere up here, like let's say 185.50 or 186 or 190. They could put a stop loss somewhere up here on a weekly time frame perspective, and they can place their bet accordingly that, you know what, in the coming weeks to months, I bet you the price is going to be lower, using that price as the stop loss area. And heck, while we're on this, let me I don't mean to jump around on you guys here. I'm really, but now that we're talking about the weekly time frame, even if I go back to the S&P 500, and this would include all of your favorite stocks that you like to trade that are in the S&P 500, or most of them, especially the ones that get pulled by the market, including your FANG stocks, this is what's going to determine the weekly close. If we can stay above last week's open or last week's low, to me, if we can stay above those, the chart can still remain bullish. But also, we are above all three moving averages. So even if we came back down here to 327, 333, 340, maybe the old previous highs of, around 340, if we can stay above that, there's no reason why we can't continue higher. But depending on tomorrow's close, if we do close below last week's low or heck, anywhere near the lows, I would be very careful holding long positions over the weekend. And like I said with the volatility before, it'll start to pick up here. Volatility is going to start to expand. So regardless of the direction that you're holding over the weekend, you got to be really cautious. You have to pick a direction in the overall market. You have to decide what it is that you want to do, as far as the overall market goes. There's a lot of trades out there. Don't FOMO. You're not missing anything. Just slow down a little bit in the trading. Maybe lighten up the position size a little bit, so you're not making the wrong mistakes. You're not getting out of the trade too early. You're not getting into trades that you shouldn't be getting into. Maybe just lighten up the trade a little bit. I can tell you this right now, no matter which direction, and I'm going to leave you with this. No matter which direction that this goes, whether this goes to the north or to the south, I can tell you right now, you're not going to miss anything. There will be an opportunity come Monday. I promise you there will be opportunities come Monday. So that's it for now. Have a safe week, the rest of the week. Have a safe trading day tomorrow, and we will see you on Monday.